Welcome to Wealthfinity. In this channel, we delve into the rich and fascinating history of gold prices. From ancient civilizations to modern times, gold has been a symbol of wealth and prosperity. Join us as we explore the backstory of this precious metal and discover how its value has evolved over time. Whether you're a seasoned investor or just curious about the world of finance, you won't want to miss this journey through the history of gold prices. Gold has been considered a safe haven for investors for centuries, and its price is affected by a variety of factors such as inflation, interest rates, geopolitical tensions, and supply and demand. Understanding the trend of gold prices over time can help investors make informed decisions about investing in gold. In this video, we will explore how to analyze the changing trend in gold prices over time. 1. Review historical data. The first step in analyzing the trend of gold prices is to review historical data. There are several websites that provide access to gold price data dating back several decades. Reviewing this data can provide valuable insights into the long-term trend of gold prices, including periods of volatility and stability. 2. Consider economic indicators. The trend of gold prices is also influenced by various economic indicators such as inflation, interest rates, and economic growth. In times of high inflation, gold prices tend to rise as investors seek to protect their wealth. Similarly, low interest rates can drive gold prices higher as they make it less attractive to hold bonds. 3. Pay attention to geopolitical events. Political tensions, wars, and natural disasters can also impact the trend of gold prices. During periods of uncertainty, investors often flock to safe haven assets such as gold, driving its price higher. On the other hand, periods of stability and peace can lead to a decrease in demand for gold. 4. Analyze supply and demand dynamics. Finally, it is important to consider the supply and demand dynamics of gold. An increase in supply can lead to lower prices, while a decrease in supply can drive prices higher. Conversely, an increase in demand can drive prices higher, while a decrease in demand can lead to lower prices. 5. Examine the role of central banks. Central banks play an important role in the gold market as they hold significant amounts of gold in their reserves. Changes in their gold holdings can have a significant impact on the price of gold. Monitoring central bank purchases and sales of gold can provide insight into their views on the global economy and the future of gold prices. 6. Monitor gold mining production. The amount of gold mined each year can also impact the trend of gold prices. If gold mining production decreases, it can lead to higher prices as demand outpaces supply. Conversely, if gold mining production increases, it can put downward pressure on prices. Keeping an eye on gold mining production can provide valuable information about the supply side of the gold market. 7. Evaluate alternative investments. Finally, it is important to consider alternative investments that can be used to hedge against changes in the price of gold. For example, investments in gold mining companies can provide exposure to the price of gold, but also offer the potential for additional returns through dividends and capital appreciation. Investing in gold can be a valuable strategy for preserving wealth and diversifying a portfolio. However, it is important to understand the various factors that impact the trend of gold prices over time to make informed investment decisions. By using the methods outlined in this video, investors can gain a better understanding of the trend of gold prices and make informed investment decisions. Gold has been a symbol of wealth and prosperity for thousands of years, and its value has fluctuated greatly over time. Tracking the historical changes of gold prices can help provide insight into the factors that influence the price of this precious metal, as well as give us a better understanding of the market for gold and how it has evolved over time. The history of gold prices can be traced back to ancient civilizations, where the metal was used as currency and as a store of value. Gold was widely used as a currency in the Roman Empire and in medieval Europe, and it remained a major form of currency until the 20th century, when most countries abandoned the gold standard and moved to a system of fiat currency. In the 20th century, the price of gold fluctuated greatly, with periods of high inflation and economic uncertainty often leading to increased demand for the metal. For example, the price of gold rose sharply during the Great Depression, as investors sought a safe haven for their money, and it also rose during the 1970s, as high inflation and economic uncertainty led to increased demand for gold. In recent years, the price of gold has once again become a subject of much interest, with many investors seeking to protect their wealth from economic and geopolitical uncertainty. The 2008 financial crisis, for example, led to a sharp increase in the price of gold, as investors sought a safe haven for their money during a time of economic uncertainty. The demand for gold is driven by a number of factors, including its role as a store of value, its use in jewelry and other luxury goods, and its industrial uses, such as in electronics and dentistry. The supply of gold is also influenced by factors such as mining production and central bank sales. One of the key factors that affects the price of gold is interest rates. When interest rates are low, the cost of borrowing money is reduced, making it easier for investors to purchase gold. Conversely, when interest rates are high, the cost of borrowing money is increased, making it more difficult for investors to purchase gold. Tracking the historical changes of gold prices can provide valuable insights into the factors that influence the price of this precious metal, as well as give us a better understanding of the market for gold and how it has evolved over time. Whether you are a seasoned investor or just curious about the history of gold, understanding the historical changes in its price can help you make informed decisions about your investments. In conclusion, the history of gold prices is a fascinating and complex story that has been shaped by various economic, political, and social factors. From the ancient civilizations of Egypt and Rome to modern-day financial markets, gold has been a symbol of wealth, power, and stability for thousands of years. Understanding the backstory of gold prices is important for anyone interested in investing or studying economics, as it provides valuable insights into the forces that have shaped the global economy and financial systems throughout history. Whether you are an avid collector or simply curious about the history of this precious metal, exploring the backstory of gold prices is a worthwhile journey.